Welcome on board the management of Titagarh Wagons. We'll talk about the global wagon tenders, the impact of shortage of coal, what their order book, as well as business visibility is looking like. Let's welcome on board Umesh Chowdhary, the MD and CEO at Titagarh, joining in on the show right now. Umesh, hi, good morning. Good to have you on the show. What's your own view on the increasing size of tenders? We understand 35,000 crore rupees globally. How much of it would help to attract foreign investors to consider building wagon manufacturing facilities in India, you think?
Yeah, very good morning. I have always maintained that, what the railways have very smartly done over the last 5-7 years, particularly under the Modi government, is they've invested a lot of money in creating capacity. So they've invested in track infrastructure, signaling infrastructure. And for the first time, they kind of broke the glass ceiling in not being shy to take on debt in order to invest in creating the capacity. So the debt had to be serviced by way of utilizing that capacity. And for that, the wagon requirement had to come up sooner or later. So now we are seeing that point of inflection where the wagon requirement or the capacity utilization is coming up. And the railways have indeed floated this 3-year kind of a framework tender where they would be buying 90,000 wagons. In terms of foreign investment, etc., I think that there is enough capacity in India, and this tender is under the Make in India kind of policy. So it has to be manufactured by Indian companies or companies that have plants in India. So there is enough capacity available and capability that exists amongst the Indian industry to be able to meet this requirement.
Your expectation from this tender, how much of the order you think you're going to be targeting via this?
So historically, our company has had about between 20 to 25% of market share. Our assessed capacity by the railways is about 8,500 wagons a year. So obviously, we will be targeting to fill up our capacity. But then again, it's a public tender. So, we need to wait to see what the final results of the tender are. That is, of course, going to be our ambition.
Right. Moving on, let's also get in a sense. Let's also get in a view as to the shortage of coal in the country. Railways are running out of rakes as well. So, what do you believe that the steps that the Railway Ministry is taking to keep the supply of coal in motion, and what has been the company's contribution on this front?
So we as a company have been supplying the largest quantity of wagon to the Indian Railways over the last years. I think in the last year, in this financial year, the total number of wagons that have been supplied to the Indian Railways, I think we should have about 30-35% of that has been supplied by Titagarh. The railways have been very closely monitoring induction of new wagons, and that's the fact that they have made a historic tender of 35,000 crores for wagons kind of says a lot on how prepared the railway is and how forward-looking the railway is becoming in order to be able to take care of these shortages. In the past, sometimes the railways were kind of balancing their average requirement of wagons, and they were shy of making a capex expenditure. But now the whole there is a complete paradigm shift under the Gati Shakti program of the Prime Minister, wherein a lot of focus is being given on the rail logistics, on reducing the cost of logistics in order to make the Indian economy more viable. And for that, rail transportation has been declared as a priority sector. So this obviously is going to make a huge quantum jump rather than having just a kind of a HUF growth rate for the railway traffic. This is going to mean a huge quantum jump. The market share of the railways, which used to be 80% in the decades ago, had fallen down to 25-26%. But I believe that with the kind of investments that the railways are planning, they should be able to go back to maybe 40-50%.
Okay, that sounds promising. And given that we can talk about the company's consolidated order book between the Indian and the Italian subsidiary, how has that shaped up and what is the outlook in terms of revenue potential, especially from the recently inaugurated Pune Metro project?
Sure. So I'll speak about the Indian and the Italian separately because both operate in a bit of a distinct fashion. So the Indian order book, as we last declared it during the December results, was about 2,500 crores. And I think you touched upon the Pune Metro, which is a very important part of our company's growth strategy going forward. Historically, the company has been getting almost 80-90% or even more in some years of the revenue from the freight division, that is the wagon business. And now the three distinct businesses that the company has, the freight business, the transit and propulsion, which is the metro and propulsion business, and the shipbuilding, bridges and defense, SBD business as we call it, all three would start contributing. So in terms of the Pune Metro, this is the first time an Indian company has set up a facility for manufacturing lightweight and ecologically friendly metro coaches that is made out of aluminium. And the first coach was flagged off last week by the Secretary Mahua. I believe that this is a kind of a path-breaking and a future-defining step, because the aluminium coaches, once introduced in Indian market, like it has been in the global market, would definitely be a preferred mode of passenger coaches rather than steel or stainless steel. So we believe the Pune Metro, of course, is at about 1,100 crore order book, but we have participated in many more tenders, Delhi Metro, Chennai Metro, and there are other metros that are coming up now. So this is going to be a very important part of the business. As in terms of the Italian order book, we have an order book of about 5,000 crores as we last declared it. The good thing about Italy is that now we are coming to the end of the old legacy contracts. When we acquired the company from the Ministry of Economic Development, Government of Italy, there were some contracts that were as old as 10, 15 years old, and there was a part of the agreement that we had to execute them, and they had huge losses that we had to absorb in executing those contracts. In the first quarter of FY23, we would be done and dusted with all those contracts. So we would have those new contracts to execute going forward.
Good morning, Mr. Chowdhary. This is Nantara. You're talking about steel, aluminium. You're talking with respect to coaches. But just given the super cycle of commodities, yes, overnight we have seen prices crash as the markets believe the worst of the war might be behind us. But just the way the commodity prices have run up, metal prices especially, what has that meant for business?
This is a cause for worry across industry sectors. I don't think, barring a few sectors, people are very happy about this kind of volatility. Resetting of the price levels is acceptable, but volatility is not. And fortunately, in our Indian contracts, most of the contracts that we have are with the price variation clause. So we are able to pass on, if not all, at least a substantial part of the increase. But having said that, there is, when there is volatility, the wholesale price index also does not move in tandem with the price increase. So there is always a challenge to that. In terms of Europe, for some of the contracts, we had done back-to-back contracts with our suppliers. So now we'll have to see over a period of time whether the suppliers honor the contracts or not. But I do believe that the price level or the volatility should settle down if the geopolitical situation kind of eases out and settles down in some aspect over the next days.
Okay, so that's how commodity price inflation is being tackled by Titagarh Wagons. Thanks so much, Mr. Chowdhary, for being live with us today on The Market.
Very much.